So hello guys, so today our topic is accounting for cash. So cash has universal usefulness and small bulk for high value and no convenient identifications, marks by which ownership may be established. Consequently, in accounting for cash, the procedures for protecting it from fraud and theft are very important. They are called internal control procedures. Internal control procedures apply to all assets owned by a business and to all phases of its operations. Internal control. Now what is internal control? In a small business, the owner manager commonly controls the entire operation through personal supervision and direct participation in the activities of the business. For example, he or she commonly buys all the assets, goods and services bought by the business. Such a manager also hires and closely supervises the all employees, negotiates all contracts and signs all checks. As a result, the signing checks, for example, he or she knows from personal contract and observation that the assets, goods, and services for which the checks are in payment were received by the business. However, as a business grows, it becomes increasingly by the business. So difficult to maintain this personal contact. Therefore, at some point, it becomes necessary for the manager to delegate responsibilities and rely on internal control procedures rather than personal contract in controlling the operations of the business. In a property design system, the procedures encourage the adherence to prescribed managerial policies. They also promote operational efficiencies, protect the business. So it's a internal control system. So first we discuss about its accounting for cash, and now we are in internal control. So few lines more, there is a assets from waste, fraud and theft, and ensure a accurate and reliable accounting data. Internal control procedures vary from company to company depending on such factors as the nature of the business and its size. However, some broad principles of internal controls are discussed below. So now what is responsibilities should be clearly established. Good internal control necessitates that responsibilities be clearly established and for a given task, and one person be made responsible. When responsibility is shared and something goes wrong, it is difficult to determine who was at fault. For example, when two sales clerks share the same cash drawer and there is a shortage, it is normally impossible to tell which clerk is at fault. Each will tend to blame other. Neither can prove that he or she is now responsible. In such a situation, each clerk should be assigned a separate cash drawer, or one of the clerks should be given responsibility for making all change. What is adequate records should be maintained, we will discuss it on further discussions. So for that, thanks for watching, and please subscribe our channel for more updates. Thanks for watching.